All right, so Bitcoin, right. It's been on this crazy run lately. And you know what's weird?
Yeah.
It's not just because interest rates are dropping. I mean, this surge started way before central banks even thought about cutting rates. That's kind of unusual, wouldn't you say?
It is pretty rare. You've got me thinking. There's got to be something else going on here, right?
Yeah.
Besides just the usual, like, borrowing money is getting cheaper thing.
Right, like what's actually fueling this thing?
Yeah.
Well, one of our listeners sent in this article, Bitcoin could surge thanks to looser financial conditions. It's by James Van Stratton.
Looser financial conditions. Okay, interesting.
Yeah, so let's dig into that. What are financial conditions anyway, and why should we care?
Well, imagine financial conditions, kind of like a mood. Yeah, like the market's mood.
Okay, I like that.
So on one side, you've got this free-flowing money vibe. Lenders are feeling good. Investors are all about taking risks. We call those loose conditions.
Loosey-goosey, gotcha.
Exactly. But then on the flip side, things can get tight. Credit dries up, nobody wants to take a risk. It's like trying to borrow a 5-spot from, like, Scrooge McDuck.
Yeah.
Not happening.
So it's more than just interest rates, right? It's like the whole vibe of the market.
Exactly. It's like you wouldn't judge a party by the price of the drinks alone, right?
Yeah, true.
So we can't really figure out Bitcoin just by obsessing over interest rates. We need a bigger picture, and that's where the Chicago Fed's National Financial Conditions Index, NFCI, comes in.
NFCI. Sounds kind of like something from The Matrix, you know?
Maybe a little, but it's not as complicated as it sounds.
Okay, good.
Basically, the NFCI takes a ton of data, interest rates, of course, but also stuff like credit spreads, how much the stock market's jumping around, even the US dollar.
Wow, so it's like the whole shebang.
Yeah, and it crunches it all down into one number. And that number tells you how tight or loose things are feeling in the markets.
So a low NFCI, that means what? Party time.
Basically, it's like investors are ready to gamble when it's low. They see those easy money vibes and they're like, let's roll the dice. And you know what? Bitcoin, it kind of loves a good gamble.
So risk is back on the menu.
You got it. And the article actually points out this really interesting historical connection.
Oh, what's that?
Remember 2013 when Bitcoin went from like $100 to over 1,000?
Yeah, that was wild.
Well, guess what? The NFCI was super low back then, super loose conditions.
No way. So this isn't just some random thing. There's like a pattern here.
Seems like it. And it's not just ancient history either. The article mentions that we saw something very similar happen during that massive Bitcoin rally in 2017, 2018.
Right, when everyone and their grandma was talking about Bitcoin.
Exactly. Looser financial conditions, Bitcoin's price goes through the roof. It's happened before.
Wow, so Bitcoin's got a sixth sense for cheap money, huh?
Yeah, it's a pretty fascinating correlation, you have to admit. But before you go, refinancing your house to buy Bitcoin, it's not always this straightforward. Financial markets are tricky, right? NFCI is just one piece of the puzzle.
Okay, so what's the missing piece then? What else do we need to factor in?
Well, the article also talks about the US dollar, specifically how strong it is. It's tracked by something called the DXY index.
Another index. All right, lay it on me. What's the DXY all about, and how does it play into this whole Bitcoin thing?
So the DXY, this dollar index thing, it's measuring how strong the US dollar is, right, compared to other currencies.
You got it. Think of it like a measuring stick for the dollar's muscle. When the DXY goes up, it means the dollar's looking pretty tough compared to those other currencies.
Okay, I'm with you. But how does a strong dollar affect Bitcoin?
Well, remember how most stuff like gold or oil is priced in dollars?
Yeah.
Bitcoin's the same way. So when the dollar gets strong, it takes more of those kind of weaker currencies to buy the same amount of Bitcoin. Makes sense.
That's okay. Yeah, I see. Supply and demand, right. A stronger dollar makes Bitcoin pricier for anyone not using dollars. Exactly. It's like suddenly everything in the US just got more expensive for those using euros or yen. And that can make some people hesitant to buy.
So a strong dollar can actually put a damper on Bitcoin, even if those financial conditions are looking loose.
You got it. It's this balancing act. Like imagine a seesaw, right?
Okay.
On one side, you've got the NFCI. When it's low, things are loose. Bitcoin wants to go up. But then on the other side, a strong DXY, a strong dollar, that can push Bitcoin down.
So it's a tug of war between these two forces.
Exactly. And to make it even trickier, it's not the only tug of war happening. You've got other stuff going on in the background, what's happening in the world, any new rules about crypto, even just what are people feeling about Bitcoin that day. It all factors in.
So like trying to predict Bitcoin is like, I don't know, reading tea leaves or something.
You're not wrong. It's complex. But look, even if you're not planning on buying a single Bitcoin.
Which, full disclosure, I'm not.
Yeah. Hey, no judgment here. But Understanding this stuff, this interplay of money and markets, it's bigger than Bitcoin. It affects everyone, even if you don't realize it.
Okay, how so? Give me an example.
Sure. Let's say you're thinking of buying a house, right?
Big decision.
Huge. So if that NFCI we talked about, if it's low, signaling loose conditions, well, that probably means interest rates are down too. Could be a good time to borrow money, right?
Makes sense.
If the dollar's strong at the same time, well, that could mean the cost of building materials, all that stuff, it might be more expensive. So your dream house renovation might cost more than you thought.
So it's like financial conditions are the overall vibe, but that dollar strength can still throw a wrench in things.
Exactly. And that's just one example. These forces, they're everywhere. Understanding them, even a little, it makes you a smarter consumer, a savvier investor.
More financially aware.
There you go. And that's never a bad thing.
Okay, so we've covered the NFCI, we've got the DXY, but let's get back to Bitcoin for a sec. We talked about this idea of a correction. What are the warning signs? How do we know if this Bitcoin rally is for real or if it's about to take a nosedive?
$1 million question, right? Unfortunately, there's no crystal ball, but there are things we can watch for. And the NFCI, that's a big one.
So that NFCI, or maybe not so crystal ball, what should we be keeping an eye out for?
Well, is it staying low? You know, is it still showing those loose conditions, or is it starting to creep up?
Because if it goes up, that means...
It could mean things are tightening up. And if that happens, if the easy money starts drying up, well, that could make investors a little nervous. They might start thinking twice about those risky bets, like, say, Bitcoin.
Makes sense. So watch the NFCI. What else?
Keep an eye on that DXY, too. Like, even if the NFCI is chilling out, if that dollar keeps getting stronger and stronger, it could put the brakes on Bitcoin's little price climb, you know? It's all about that balance between those two forces.
Right, like that tug-of-war we talked about earlier.
Exactly. But then there's that third thing, that wild card. You ready for it?
Hit me.
Sentiment.
Oh boy, sentiment. The feels, right?
Exactly. You got to pay attention to what people are feeling about Bitcoin. Are they still feeling bullish, like to the moon? Or are they starting to get a little nervous, starting to whisper about bubbles?
It's like trying to read the room at a party, right? 1 minute everyone's dancing on tables. The next, they're all huddled in the corner, gossiping.
Perfect analogy. And just like at a party, things can change fast in the crypto world.
So, okay, what's the takeaway here? What should someone do with all this information?
Honestly, the more you know, the better. Even if you never buy a single Bitcoin, understanding this stuff, these forces that drive the markets, it's like having X-ray vision into how the world works.
We're unlocking a secret level. We're not just reading headlines anymore. We're like financial detectives now.
There you go. It's about connecting the dots, seeing the patterns, and honestly, it can be kind of fun once you get into it.
Okay, I gotta admit, I'm kind of hooked. But seriously, this has been eye-opening. We didn't just scratch the surface of Bitcoin, we dug deep into the forces that move all markets. It's about risk, reward, and staying informed.
Couldn't have said it better myself.
So, to our listeners, thanks for coming along on this wild ride into the financial matrix. Remember, next time you see a headline about Bitcoin, or any market really, don't just take it at face value.
Ask questions.
Dig deeper. Who knows? You might just unlock your own secret level of understanding. Until next time, happy exploring.